The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the Monday edition, Monday, July the 21st. And my pleasure to be here. Thank you for two great shows. This is very interesting here at TFNN, all about education. And what do we have? We have John Logan starting off at 8 o'clock. Fabulous show. The Global Market Pulse. And John started off with a demonstration of some of these techniques and some of the software that he uses, etc. Oh, excellent, excellent show. Thank you, John. Comes Steve Rhodes. Steve Rhodes came in 2 hours. Wonderful show with Steve. First hour, then the second hour, 10 o'clock, Money Masters. And I'm on for 11 o'clock, the Tiger Technicians Hour, 877-927-6648. That's the number to call. Love to hear from you. And let's say, following me, you got Larry Pesavento. You got programming all day. It's just we've got a new lineup in terms of times. I'll be here at the same time at 11 o'clock. A number of us will be at the same time, but there are some changes. So please just go to front page of TFNN. Check it out. Check out how Tom O'Brien has made it all about education. And from 8 in the morning until 6, it'll probably even go later than that soon, but at least we've got programming to give you the technical veracity as we see it using our techniques. Tune in. Check it out. My service is the opening call. It's a very comprehensive look at the market. Every day I send out my charts going to my site here at Tiger TV, at Tiger front page of TFNN. And what happens is I start sending these charts out. Well, over the weekend, I start sending them out as I make them. I spent a lot of time this weekend showing why there were certain parameters that we were looking at, but the bias based on the volatility index indicated that there was a greater chance that the upside was limited here and that we could start to move down. One of the reasons why in my opening call, our bias is to the negative side. We do have longs, but this is more important that we are looking towards some kind of consolidation, some kind of digestive phase going on right now. Actually, it's been going on for quite a while. A couple of things that are very important. As far as the longer term is concerned, I have to remain a mega bull, waiting for that big moment with the skyscrapers, etc., to be announced here in the United States rather than elsewhere in the world. But even more important than that, I am expecting some kind of a pretty serious sell-off in some sectors. Now, the big question will be, does it impact because of this rotational aspect? You remember back in summer of 2010, I said this is going to be the big test of the takeoff from the March 2009 low to see whether or not prices hold very well, what we call a high-level consolidation, as we see the market rotating from the stronger stocks having a breather to the weaker stocks having a rally. And that's been the modus operandi of this market ever since. It is the most hated mega bull market in the history. I don't remember even 1983, the takeoff in August of 1983. From that moment on, I remember daily Reagan being excoriated by the press and everyone else, and afterwards he became a hero decades later. But I remember it very well. In fact, that market just kept going higher and higher. Forget about your president right now. You've got to think about the marketplace. In fact, I always say that. It's the reality of the market, how it perceives things, and how it moves from there. It's not policy. It becomes policy later on, as it will become policy with Yellen. At some point, I think within about a year, we're going to see that policy is going to really matter. But in the meantime, it is the market, and the market technicals are saying to me that we should get at least a rotational correction. This actually started already. And at the same time, even within sectors, you'll get strong and weak stocks. It's when we start to have, and this is going to be very important, it's when you start to see that the market is responding negatively to every bit of news, whether it's positive or negative, and that the headlines are starting to tilt towards negativity, and the market is responding negatively, that we will get a deeper correction. So Friday's move to the upside was really option related. It had a number of things going for it. I didn't believe it. I said to subscribers to my opening call this morning, we can expect to give back some of the gains. Well, we actually gave back a chunk of that this morning, but not all of it. Look at the E-minis here. This is the E-mini trading at 1960.75. Let me just open this out, and then I'm going to go through all the numbers. Look at it. Look at the way it came down from the 1978.25 July 3rd high in the September E-mini future contract, and then it hit 1945. And rallied very sharply at 1978, 25 cents off the previous high, and then came down to a lower low. So what is it doing? It's making lower highs and lower lows, even if they're just nominal, because it only went to 1942.50. That's only 3 points lower with a big span between. But look at the MACD and the stochastic. They are poor. They are terrible. And that says to me that there was no... the bias on Friday was price movement, but it wasn't followed with good technicals, and that had to give it back. And I said to my subscribers, I always show this chart with the daily on the left and the 120-minute on the right. And what I'd said is if this low is taken out right there, 1963.25, the low of the 21st, that was today? Oh, yes, early this morning. Then we can expect... the 200-period exponential moving average to be hit. And here we are, 1961.25, with a low so far today of 1959, round number low, watching this closely. But the MACD is just about to turn negative, and the stochastic is. So let's run the numbers, and then we'll go to our callers. Let's go to the Dow is down 107 at 16,992. The S&P is down 10 at 1967. The comp index is down 22 at 44.09. Gold is up $4. It was up more before, but it's only up $4 now. So far, I don't see the play of gold as a currency of fear being active right now. It's holding well, but it isn't yet a currency of fear. And that makes the gold... down up 4.20 at 1330.60. Silver is up 0.07 at 20.96. Now this is very interesting. The dollar is at 80.56. Look at the dollar, DXY. The dollar looks like it wants to make a leg D in the daily, and this is the dollar index. But the dollar contract, DXU 14, has made a leg B, and this is possibly a peak B if by the end of the day it doesn't break above 80.755. Now, my suspicion is it's going to, because the technicals, the MACD is at 88%, the MACD is strong, the stochastic's at 88%, holding the 9-period moving average, pushing above the 200-period, trying to make that a support level, and that right now, the 200-period is at... let me give it to you. It's at 80.575. So, yep, doing very nicely. The dollar, I've always said, dollar, at least last for many, many years, is the dollar has experienced whack-a-mole as the Fed wants to keep it low. But I don't know if they can keep doing that right now. It looks to me like the dollar independently wants to run higher. So it'll break down if it goes under 80.30. Right now it's at 80.62, closes under 80.30. And right now I'm anticipating that it could very well go above 80.755. The Euro, EUR, USD. I haven't spoken about bonds. Watch this. So Euro is not acting very well. It looks like at best it's going to make an M, a lowercase m in the weekly, but at worst it's going to take out last week's low of 1.3490. And here we go. USU 14 trading up 21.30 seconds. Now, is this leg? See, this was A. But the moment it takes out the high of 138 and 1030 seconds from the week of the 30th of May, that becomes F/A with a bias for me right now of A, actually. because there's a chance that we are making some kind of a top here. There could be time and price in the general market. So our bias in my opening call is very much to the downside. And I want to go right now to our caller, Larry in Cheyenne, Wyoming. Hi, Larry. How are you?
Well, hey there, Basil. Good morning. My question is about the KBE, just simply the banks within the S&P, not any. There's no brokers in it, things like that.
Right.
And
So
it's a great chart. I mean, so many of your characteristics you identify are present. And I went short. It did, by my count, a C failure on in July 1st, and it couldn't get. It did about a 786 retrace of the high on 321, and also something we don't really look at, but it's kind of a head and shoulders. And so my question is, target-wise, it's set up for an M pattern, so to speak, in price and time. But the question is, if this correction did get more serious, those are fairly low volume lows on February 3 and, the one on 5/15. And the one-to-one Chapman wave down pattern is closer to 29. So do you think, how do I determine, I've got some September puts, I bought them on the 120-minute thing, 2-hour time frame, around 33.60. They're doing well. So my question is, Basil, target-wise, how do I make sense of what a probable target would be on something like this, knowing in a fundamental way the housing, mortgage lending, banking is slowing?
You've done some fabulous, Larry, you have really done a tremendous amount of work in this study of the Chapman wave, and your analysis is very, very good. I'm going to just add a couple of points here. You, I believe, have missed, unless your data is a little different to mine, but I think you've missed a peak. Let me explain, first of all, folks, for those of you who are new, because we've got so much in the way of programming here, you might have decided you're finally going to join us. Congratulations, good choice, and I'm thrilled to have you listening to my show. Most importantly, in my Chapman Wave CD book, introducing the Chapman Wave methodology, the criteria for identifying peaks is that you have to consider the leg going up, even if it's 1 penny difference below the previous high bar, that counts as a peak. So I'm going to show something here. I'll get to each step individually. If you go to the low of the 15th of May in the KBE, which is the SPIDER S&P Bank ETF, and now this is very important because I couldn't remember offhand whether this is regional banks or if this is all the banks but not the brokerage houses.
Well, you're right, it's D. Yeah.
So let me just do this. I wanted to show that we've gone to a peak D, which is the objective in the Chapman wave, and I'll do the analysis on KBE daily when we get back. Larry's done a great job. It's on the 200-period moving average.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. We're on with Larry and Cheyenne. Hey, wait, how do you pronounce it? Cheyenne?
Cheyenne.
Cheyenne. Okay, good. Cheyenne, Wyoming, and we're looking at KBE, and KBE is trading at 32.23, down 16 cents. And this is what I was telling Larry. In my CD, Introducing the Chapman Wave Methodology, the book, I make a big deal about identifying the lowest left side trough. In this case, it's very obvious that 30.60, the low of the 15th of May, is the low that started a move to the upside when the next day it had a higher low bar, and that's important. This bar cannot be a low until it is identified by the little V-shaped bottom, because the next day has a higher low bar. And the next day's low is 30.82, 22 cents higher. That starts off a move, and from that moment on, it's called leg A. And what's important about this leg A is that it has a high of 31.49, but the very next day it has a high of 31.48. Very easy to miss, but in fact it was very important. Why? Because the next leg that broke above 31.49 and went to 31.50 starts leg B. And that leg B is a floating B now until it makes a peak. So it went to 31.68 on the 21st, and lo and behold, on the 22nd, it goes to 31.68. It doesn't push higher, but it does go higher on the 23rd. And what happens is that is leg B, and finally it makes a peak B on the 27th of May. And this is the beauty of this. Look at the way the black line, that 9-period exponential moving average, became just wonderful support all the way until it went to peak B, and then leg C, which became a peak C. Now, what's interesting about the high of 33.66 on the 9th of June, the faster moving average of the MACD, the green line, is acting beautifully very strong. The stochastic goes all the way to, I think it was 90-something, goes all the way to 95.91. And that says that there should be higher peaks to come because there's so much strength. But it also says be careful of the next pullback when the stochastic pulls back if there is no new high to make leg D. And lo and behold, for 2 days, it flirts on the 18th and the 19th. It flirts with 33.63. Doesn't go to 33.64 for leg D. It goes to 33.62 to make another peak C. So I call that peak C1. Then peak C2, and then it has a pullback and a sudden spike to where? 33.65. Oh, 33.65. So that starts your leg D. So the pullback after that, you could have thought, okay, stochastic's pulling back, MACD's pulling back. That should get a down candle because it also closed under the 9 EMA. Instead, what does it do? The magnet of the 9-period exponential moving average, as well as the fact that the MACD was not really breaking down, it was sort of flattening out, allowed for one more spike to 34. And what is 34? It is a round number, which turns out to be peak E. So in other words, if you were in the trade and you were looking for a peak D, you could have got out the very next bar. But it went higher. Well, you are not the stock. The stock is the stock. It's not your fault that it went higher, but it goes higher. Well, it's not your doing that it goes higher. It just goes higher. But what does it do? It goes higher without the technical strength of the stochastic and the MACD. So it pops up to round number 34, and that's it. And on the way down, it comes trough A, trough B, trough C, makes a trough D at 32.04, right on the 200-period exponential moving average. I don't know how that happens. It's just an amazing thing. Allows for a little bit of a bounce Friday, and today that line is being tested. And the MACD is not good, but the stochastic is just about to try to flatten out at 15%. Now, when we look at the 120-minute chart, the 120-minute chart low of 32.04, at 4 o'clock on the 17th, saw a bounce and a give back, and today's trying to hold above that. And it's saying two things. One is that if it takes out 32.04, let's just call it 32. If it goes under 32 and breaks down, that's going to be very, very negative and suggest that what we have here is a very, very long-term, in the daily I'm talking about long-term, arch formation all the way from May at 30.60 that can come all the way back round, and if the 200-period exponential moving average at 32.07 becomes a repellent, then we will be looking at the KBE, which is the Spider S&P Bank ETF. Now, I meant to do it during the break, but instead I just wanted to complete the notation on this. If memory serves correctly, this was more to do with the regionals, but I don't want to be, I'm just saying that that's what memory says, and memory could be wrong. So what I'm going to do is I'm going to go to the most important bar right now, right there, and I'm going to do a left side, right side price time match, and we've got a break coming up. And what I'm going to do is ask you now, if you don't mind holding on, I'm just going to wrap it up as we get back from the break, and then we'll go to John in Miami so that we have a good spectrum. So hold on, if you don't mind, and we'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 88. S&P's up down 8.85, and we are on with Lemmy, Cheyenne, Washington. Did I say that right?
Yeah,
Cheyenne?
Basil, it's just remarkable how many different opinions can view a fairly simple count in different ways. But my data point on D came a penny lower than the other point, and I was trying to be conservative, so I had a downtrend channel from the April high. March high, and I didn't count the A, so it's amazing, isn't it, how much people can read it differently.
Yep.
But my question is the target. What do you think happens going forward? Do you think it's an M, a simple M?
Yeah, so now this is what we're looking at, folks. I'm going to go to the weekly chart, although I haven't quite finished notating it, but there's something that I came across that is really important, and it gives downside targets, but I need more evidence that that's the case. So I'm going to go very conservatively right now and say that the weekly chart has gone to 30.77, 30.70, 30.70, 30.60. From higher lows, no, it's making lower lows and lower highs. That to me is important, because what it says is that the technicals are starting to fail, and there's a very good chance that these regional banks, the S&P Spider, KBE, if it takes out, right now I can tell you, if it takes out 3150, it's at 3221. If it closes on a weekly basis below 3150, there's just a really good chance it's going to test and probably break the 30.60 low. That's about another 8% down from here. But there are two things that are very important. The downside to me the downside trend seems to me very obvious right now, but there could be a little bit of a bounce, and the bounce could take it to 32.69, the 9-period moving average, but that's just the best case scenario. Everything has to come together for that to succeed, and then it would be between 32.69 and 32.84, and then it should make an arch formation and then slowly come back down and take out the left side low. So I'm agreeing with you. I've also got it in a down channel, and all I need to see is that the 200-period moving average at 32.07, let's call it 32, becomes a repellent zone. Every time it breaks under it, it can't close above it. And as soon as it starts doing that, you'll see more acceleration to the downside.
So, Basil, just to sum it up, you're in favor. You see evidence enough that a 1-to-1 from the March high seems possible.
So the 1-to-1. Let me just draw this right now. Oh, from the March high
On the daily.
Okay, I just want to go to this one here, right here. This is the high from 34 round number to 32.49, and that would be in the Chapman wave. That would give you. Because this is not just an extension in price. The idea is to encapsulate in this technique a price and a time. And that says on the 24th of July, there's a good chance that it should be at 31.88.
Got it. All right.
Okay? And then we go from there. Thank you so much for calling.
It's just wonderful, wonderful thinking. Yeah, okay. Thank you, sir.
Thank you for calling in, and congratulations on a good trade. Let's go to John in Miami. Hi, John. How are you? Is John there? I just want... Oh, John, I'm sorry. John dropped. Okay, the question was... So, John, call back while I'm on the phone if you can. You can just tell the engineer to yell or give me a text to say you're online. John, I wanted to talk about 30-year bonds. So let's do this. It's appropriate that we look at, first of all, for me, I'm going to go to the continuous contract. And the continuous contract, because it made a lower low bar on the 3rd of July at 134 and 11/30 seconds, that this is a brand new move to the upside because it went below the 134, 15/30 seconds of the 5th of June. If that's the case, I'm putting in an up arrow because the stochastic is very strong at 86%, or strong, not very, but it's strong. And the MACD is still expanding. So this is a brand new leg A, peak A, right there. A. Oops. Uppercase on the way up, lowercase on the way down. This is leg B. That's another reason why I'm a little cautious about the market. I see that money is going into the John. Hi, John. You're there?
Hey, Basil. It's John. Yes, I'm here.
John. Okay, good.
Good.
So the question on the bonds is?
Yeah, I just want to see your take on it, and if this is a new leg B or if it was
So I remember distinctly that there was some divergence, and I can't remember if it was bonds. So I think it might be even the TLT. Let me just double check. TLT went to a low at 110.34. This corresponds exactly with the low in the TLT, except that the TLT has broken what was support, now has become resistance, and it's gone back to being support because it broke above it. Today, the support is now at the low of the day, which is 115.01, and 115.63 is the high of the day. So this is leg C with very good technicals in the daily. This is the TLT contract, and in the weekly chart, there's a very big cup formation that formed, but it is also now producing a cup and a ladle. A cup and handle formation. Not one of my favorites. There's nothing wrong with the pattern. It's just that it's a pattern that very often fails, except for one thing. The MACD is deflected back up, and the stochastic was weak, and now it's strengthening as a 72%. So here's what I'm looking at. What would I call this new leg in the weekly? I have no choice but to call it F, because it picks up the previous high, because it never took out the major low of 101.17. It's trading at 115.42 right now, up 89 cents. So this is F/A. In the weekly chart. Most importantly, and this is what I'm going to spend just a moment on because it is so important, I mentioned this on Friday, that if the TLT took out its left side high in the monthly chart of 100 and 15.19. It didn't have to close there, just had to take it out. That would be leg B in the monthly chart. The month has over a week and a half to go. So that says so far the MACD and stochastic are turning up. It's breaking the downtrend resistance line, long-term downtrend resistance line. The bond contract itself, I have to go to my continuous contract, hasn't done it yet. The bond contract needs to get to, the continuous needs to get to 140, I would say 140 and a half. That will start to break it out. So the answer to you is, in my monthly charts, it's a very good pattern. Hasn't broken out yet, but this inside, I always talk about this in the channels. You get an inside track, just a little distance between the low. You can draw a trend line which becomes a support cushion, and that should be a propellant on the way up in an up channel when it gets to the bottom. And on the way up, the higher one, the inside track, becomes resistance. So right now, we've got leg 138.10, we've got leg C unfolding. It's very unusual for C's to abort. They can, but it's unusual. But you can get quite big pullbacks in bonds from C. So this is leg C in the monthly, and it's the continuous contract. I wonder if I can get it with the USU. No, my USU has gone to a new high, but it's not the contract I can use because I don't have enough data points.
Hello?
So Jan, I just wanted to say the support in the weekly chart, now 138 and 22 30 seconds is in fact very close to what bonds are trading at right now. So I'm going to use that and just say that in my weekly, I'm calling this E/A for now. I'm going to give preference to E, but what's really important about it is it's held the up channel very, very nicely. And it seems to be wanting to go to the midpoint of this channel. I'm just going to draw it in there, right there. Yeah, if this week on a closing basis, bonds can close anywhere above 130, let's call it 139, going to the 139s or higher, that's going to be very important. They will fail if they break under 136 by Friday. But so far, things look good.
And Basil, can you show like a lower time frame, like a 2 hour?
Okay, in the 120-minute chart, this is brand new leg A, B. This is leg C in the 2 hour chart. Let me double check what I get on the continuous contract. Yeah, this is A, B. This is leg C. Well, it has to be called F/C, but I'm really giving preference here to C. Okay. So I will officially call it, because that's the way I always notate it, F/C, but I'm suspecting that it goes to at least a D, but I do want to check something. 138 and 5/30 seconds, yep, that's good. Okay, so I'm calling this leg F/C.
Okay. And Basil, sometimes, because I know right now the S&P and the bonds are not correlating, do they sometimes correlate where they both go up or go down at the same time?
I can show a chart. Let me see how we're doing for time. Let me get rid of this one here. Close this workspace, save, yes to all. And I'm going to go to this particular chart, and I'll show you if I can find it. I hope I find it. It is fascinating. You'll see something. Now, coming up. Then some questions in the den I wanted to get to. So what's happened now, that in the weekly chart, the TYX, the 30-year, has gone to a leg F to the downside, and this is a brand new A, and the 10-year and the 5-year are still stuck in a trading range. So while I've got that on up, I'm going to just, I wonder if I can find it. Let me just move things around a little bit. Is it here? Is it here? Is it there? Is it here? Was it the white background? Was it the red background? I wonder if I can find it. Oh, there. No. Okay. I think I can get it this way. So I'm going to go to charts, and it was on a weekly or a monthly. TYX, UUP, GC, UNP, and I'm going to say that it is this one there. Okay. Let's see if this is the one I can get. Nope, it's not this one. It's a pity, Jan. I had it. I'm going to answer the question, but I will try to find the chart maybe tomorrow. If I remember, I'll be able to do it. Is that it? Yeah, here it is. So here's the S&P And here's bonds. This is actually not the chart, but this is a good chart to look at. And what's really important about this chart is you're going to see that there are times where they go together, but most of the time the bonds have been in their own universe. Look, the S&P has really gone straight up in the monthly chart, whereas bonds only occasionally joins it for that move. So I'm going to say to you that bonds, because of the Fed, bonds have really been in their own orbit. They've done their own thing. And if you look at it in the chart that I showed just a moment ago over here, look, bonds have been basically in a trading range for a very long time. They're trading at 3.247% in the 30-year yield. And if I draw a straight line across like this, like this, we've been there tons of times. We were there back in June of last year. We were there during the whole period of 2012. We were there for most of the first part, going to the end of 2011 into the first quarter of 2012. So yeah, we've been here before. So the issue of bond yields right now is really an issue of perception of the Fed's determination and of keeping rates low. That's really the issue. Remember, I've been talking about the Japanization of our bond yields for about 10, 12 years now. So I don't see anything to change that, the Japanization of our bond yields. So I hope that answers your question.
Thank you, Basil, and good seeing you there on the screen. Thank you.
Thank you very much. Hope it is good. Thank you, Jans. So now what I want you to do, folks, is a couple of questions in the den. And I'll have to go backwards because I just can't see it quick enough to be able to get to it. Apple. So what is the question? Apple reports tomorrow night. Given your reading of Chapman Wave, will Apple react negatively or positively to what is printed? So this is going to be my answer to Apple. Let me just fix this up. I don't want the space to the right to be too much. 7. Okay. Apple, as far as my reading is concerned, is making a high-level consolidation. It made a cup, and in the Chapman Wave, this is a cup and ladle breakout pattern, and it goes to D. When it went to D, and I now have to put a down arrow from the high of 97.10. Two things are happening here that are very important. The MACD is weak and the stochastic is very weak, and the price has so far not been very strong, but it's holding beautifully in the upper 1.5%, let's say 2% of its recent range. So what will change things? Well, you know the technique that I've developed over the last 2 years or so that I don't talk about very often, but it's called the Chapman Wave one-to-one expansion. It's price and time. It's a parallel expansion. It's not just time. It is not just price. It means from a particular identification bounce in a straight line move to the downside, or it was the upside if you're going up, you'd get a measured move to the downside. Well, when I see this is one of those projections that says, well, if such and such can happen, such and such can happen. I don't like to do that. I just want to talk about levels that are identifiable very easily. If by tomorrow, when Apple gives its report in the after the bell, if Apple closes the next day, on Wednesday, opens the next day, underneath 93.02, I will then say there could be a measured move, and I'll talk about that as soon as we get back. We'll be back, talk about some stocks, 1085.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians out. Dow's on 81. S&P's down deeper. It's down 9.30. So this is going to be a very interesting session on the close. 2 things I wanted to do. One is we're looking at Apple, and as I said, Apple, I don't know what the earnings will be, but as far as I'm concerned, what we're looking at here is Apple, if it takes out on the upside, I spoke about the downside. On the upside, if it closes above 95.90, I'm not sure what's going to trigger that kind of move in Apple, unless they announce some really good news. And they tend these days to be very conservative. But if it does, it could test the 97.10 level. And that would be very important because a close into the 97s says, hey, the 100.72 all-time high is going to be retested. So that's why I'm talking about this as a rotational market with my bias to the downside at this particular stage. But I'm going to be as flexible as I can because the weekly charts, as I've been speaking for some time now, are really very, very strong. The rudder is the daily. Well, it's really the 120-minute chart, which leads to the daily. So how we close today is going to be very important. The fact that 500 stocks are weaker than 30 stocks is, to me, an important factor. But 2 things that I'm going to be looking at is, where is the VIX at the close today? Has the VIX been able to push into the high 13s, or is it coming back down to the 12s? Because that would be buying pressure. Selling pressure is up in the high 13s, 14s. That's really intense selling pressure. So a couple of questions. This is going one at a time now. From the Den was Facebook, Facebook is trading right now at 69.22. It's done everything that we spoke about the other day. It broke that downtrend line. I tried to get it for my subscribers this morning because I thought it was worth a trade. It didn't pull back enough to get it. I didn't want to get it on any gap to the upside. Just risk reward, that's all. But it's still looking strong. That's what I said to my subscribers. This is a market that features strong stocks and weak stocks. They are slowly, I'm seeing more and more stocks becoming weak, especially the ones that have been doing fantastically. So in the daily, in the weekly, this is leg C in Facebook. So this is saying, hey, I want to go to 72.60 or higher to make leg D. So that's that, and I want to do so that's Facebook looking good. Real quickly. So Netflix, yes, is coming out, but I had two questions. There was a question about an instant restart. I'll try to get that tomorrow, but the question right now, Lorraine asked AMCS, and this is what I'm looking at here. Made a peak E in the daily, American Superconductor or something like that. What is it? American Superconductor. The weekly chart has gone to a peak D, and it's going to be really important because it's acting well right now at 1.82 up 2 cents. If it breaks 1.80 to 1.74 key support, then I'm saying to you, just be really careful. If it holds here, and by tomorrow it's able to sneak into the 190s, and then regardless of what the market does, that would be very impressive because it would be starting to get into the 1.97 area, because at 1.97 it goes into the wick of last week's candle that says, hey, if I'm able to get into the wick and I can hold there for 2-3 days, I'm going to retest the high of 210. So I hope that helps you, Lorraine. Now, let's go through a couple of things real quickly. Then we're going to Larry Pesavento. Should be a great show as always with Larry. Trade what you see. Now, let me just do this. A couple of Facebook reports on Wednesday. Well, so far, Terry, it's acting very, very well. Here we go. The VIX. VIX. I showed my subscribers chart, and I discussed it in great detail this week. And it was the weekly chart. I showed the daily, weekly, monthly. And I was explaining what we could be looking at here. And we don't know if it's going to happen or not. But the long-legged wick of last week says, if the VIX index holds for 2 out of 3 days above 15.38, it's at 13.17 right now, this market will have a tough time going high. It should be going lower, in fact. But there are signs that in the VIX there is a turnaround in the momentum on a technical basis. So let's make it real clear. The Dow is consolidating right now. It's only down 69. But if the Dow closes today anywhere under 1,700, be careful. And if it closes up at 17.83, that's not bad action. I'll be back tomorrow. Stay tuned. Larry Pesavento.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.